Welcome out to the Trading Justice Podcast. Excited to do the podcast today with my brother Matt. We're going to talk a little Jackson Hole. I'm going to dig into my brother's crabby side, and in his reading of charts, I get a kick out of that whenever I can call him the bigger bear than me. But listen, we have a lot of fun on the podcast doing this together. We have a lot of fun with our pro membership. Our pro community, our tackle trading community, is just a high energy place where we talk charts, we teach, we navigate the markets, we grow our accounts, we work towards those goals together of retirement, of financial success. Our pro community is an amazing place. It is something that I'm proud to be part of. I'd like you to be part of it too. Come join our pro community today. You can sign up for a trial to see what all the hubbub is about. Come sign in, send me an email at Team of Tackle Trading, and I'll meet with you. We'll get you set up, raring to go. But my brother Matt, my crabby bear brother, how are you doing today?
I am not a crabby bear, but I am a crabby bull waiting for some momentum in the market. You could definitely describe me as a crabby bull, but no, I'm not the crabby bear. That's you.
Yeah, like out of the two of us, if somebody says, is the market a bubble? You're like, no, that's stupid. And I'm like, yeah, this is a bubble. If someone says, is something bad coming? You're like, well, let's analyze it. And I'm like, yeah, probably.
Pretty much.
Right. I'm the bear, but I always get a kick when I read your technical writing, right? When you're analyzing it, and I sense some hesitation, some crabbiness. And so I got a kick out of it reading it this weekend when you were talking about the structure of the trend and maybe the lack of the momentum. Because, as a theta trader, I'm like, this environment's great, but for
Oh,
like
if you're a cash flow trader, you love
today was fantastic, right? Like, more of this forever, right?
oh
But
yeah,
like,
keep
so I
keep
get a kick.
keep staying slowing momentum. Just stay slowing momentum. I
Yeah.
think
So I go,
that's
yeah.
the number one
What,
thing theta loves is slowing momentum.
what are you seeing, right? As an expert technician, what are you seeing on the charts to give you what I joke to be crabbiness, but it's more of a, okay, what is
Well,
this trying to do?
you
More,
know, there's the last couple, well, really kind of the last 3 weeks in the newsletter. The first article that I write in the newsletter is the technical update, and we basically go through our rankings of the S&P 500, talk about the justification for the ranking. Then I go into, and then I kind of pick a topic sometimes. Other times I just write about the pure technical condition. This time I wanted to teach a little bit. I always try to teach, educate, and inform in the newsletter. And I wanted to educate our community on Elliott wave and wave counting and where we're at in the current structure of the trend. And one of the things that I've been looking at recently in the markets, wrote about it quite a bit in the newsletter, obviously in the video of the newsletter as well, was the slowing momentum conversation that's really kind of, in my estimation, been dominant for the last 2, 3 weeks in the S&P 500. For example, you might look at, the last 2 weeks of the market here and be like, what are you talking about, Matt? Markets went from 6,250 up to 6,500. It's went 250 points over the last 2.5 weeks. What are you talking about, momentum? And I'm like, well, that was a gap down due to the labor. It recovered that, and outside of that, it's been one momentum candle. And that one momentum candle really didn't see any follow through. In fact, we got four types of dojis, a hammer, a harami, a dark cloud,
it's a little doji class.
and an inside. Like it's doji day, but you got that last four candles. And so, in the newsletter this week, I talked about the market from a trending perspective. And where are we at in the trend? I have us at late stage trend is what I have. That from an Elliott Wave perspective, which in Master Trader, when I get done with the podcast, I'm just heading over to Tackle Trading, and me and a bunch of pros are going to hang out in Master Trader tonight for 3 hours, and I'm going to teach in detail trend analysis according to Elliott Wave principles, Fibonacci, ABC cycle, and I really want our community to understand kind of not just in general what is Elliott wave theory, what is Fibonacci, how to wave count, how to assess early stage development versus late stage, what patterns to look at early stage versus late stage. Obviously I'm going to go through all of that tonight, but in general, I want them to understand kind of what I'm seeing in the market here. so that as they read the newsletters, they watch the video, they have an understanding, a deep understanding of how I see this from a technical conversation. And when your late stage trend, I got us in wave five late stage trend, you oftentimes do see momentum shifts, and you oftentimes see lack of consistency on the momentum side of the equation because that leg, wave five in Elliott wave, is a slowing momentum wave. Now, it doesn't mean all the candles in the intraday side of the equation have seen that. But what I have personally witnessed over the last couple weeks in the market, as living on intraday charts here, Mark, is the market here has not necessarily been consistent. It's been up, but it hasn't been a momentum consistent trend. It's went up, consolidate, up, consolidate. It punches up, it consolidates. It punches up, it consolidates. And you might describe that as, okay, well, the bulls have control of the overall price action. I would say yes on most time frames. They certainly do have control of most price action right now. But at the end of the day, I got this as a momentum shift. I got this as the trend slowing its momentum. And I think there's a couple interesting, very important support levels that are extremely important for the market to hold. One being the combination of the 9 and the 20 SMA for short-term pattern development, and then the trend line you see here on the chart for overall structure of trend. As long as we're above that trend line, we're having some degree of bullish conversation. My 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 take here on that trend line, if we ever break that trend line, we're firmly entrenched in ABC cycle, which is basically a short-term downtrend against a previous uptrend. And they look really good on weekly charts, quite frankly. So these conversations aren't anything to fear. It's more to add, just to have context over what's happening from a price action perspective.
Yeah, no, and it's interesting market dynamics because, depending on the type of trader you are, like if you were loaded up on calls or puts today, probably not happy, right? Theta traders happy, but it's recognizing, and this is very important. This is something that we teach everybody in our community. And, like the Master Trader event tonight is going to be fantastic. I'm sure pro members are looking forward to that. But like recognizing the technical backdrop, right? Whatever the nuances are, because they change, right? Whatever they are, is such powerful information, and knowing those key levels. And I love how you lay that out, the 9, the 20, the trend.
Your mic cut out. Mark, your mic cut out.
Well, I'm going to have to switch mics, and I will work on the next time you're talking. But that's half the story on the SPY and the Qs. What about like RSP? What about the Dow? Because one of the things since we last had a podcast is we had a little CPI report that kind of set into motion a little bit of rotation attempt. Not a successful rotation yet. It's trying. All right. Mm-hmm. It's trying.
Well, I think there's two things that I'm looking at from a causation perspective that go along with the momentum part of that conversation we were having. The first is what we talked about, late stage trend. Oftentimes, when you are in a late stage trend, there's been buyers along the way. There have been buyers all the way through this trend. And so now the ultimate question is, are those buyers going to continue to propel it up? I do think 6,500 is a level to kind of look at this week. That's kind of the resistance level, the 9 EMA on the downside, and the trend line there as well. But the second part of that momentum conversation that I feel is extremely important here is whether or not the indexes that we don't talk about all the time, right? That don't get all the love on Twitter, that don't get all the love on Facebook, that don't get a lot of love out there at all. Dow Jones, RSP, IWM, can what I define in the newsletter as the other indexes, for example, can IWM confirm a short-term bullish flag-based pattern? That's an interesting technical setup happening literally right now. But more importantly, can the Dow Jones, can the diamonds, DIA or slash YM, can the Dow Jones break out of what I would describe as an extremely powerful resistance level? And when you think about the momentum side of the equation, as the Nasdaq and ES over the last couple of weeks continue to go up, 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 not with a momentum situation, but consistently go up, up, up. Well, when you look at the Dow's kind of flatlined against that resistance level at 450. You break out of 450, S&P breaks out of that 6,500 level. That's a level where you think you can get some momentum. So the ultimate question for me technically this week is, can the market find momentum? That is the ultimate question for me this week. And in the ES, you can talk about that all day long above 6,500. But to me, the momentum isn't just going to come from the ES or the NQ right now, because we've been seeing that and we have not had that momentum condition. We've been seeing the ES go up. We've been seeing the NASDAQ go up, but not from a momentum perspective. I'm talking about that giddy up and go trademark. I'm not talking about you cash flow traders that just like to scalp credits and get a little bit. I'm not talking about a day trade from 60 to 6,500. I'm not talking about a partial position swing trade because you're confidence on the momentum sides there. I'm talking about where the market can really drive. Where can the market really leg up? Where can the market not find momentum for a day, but can the market find momentum for 3, 4, 5 days to drill 200 points to the top side and burn those bears? That's what I'm talking about. And we have not seen that in the last 2 weeks. And one of those reasons, once again, is late stage trend on the ES that probably needs a little bit of proper development from a pattern perspective, and that would be a multiple week conversation. But really, the other indexes haven't been participating. See, Mark, we had momentum. I want you to think about it like this. Was I complaining about momentum in May?
Nope.
Was I complaining about momentum in June?
Nope.
But have I been complaining about momentum since late July?
You have.
Okay.
I've gotten a kick out of it.
Okay, so in May and June, let's think about those months where bulls were just happy as good as could get out. Well, in a recovery, okay, after the market dropped in April due to Liberation Day and the tariff conversation, in a recovery, everything's going to recover. Would you agree with that?
Of course.
Okay, but after something recovers,
especially after volatility events, markets tend to have a one-to-one correlation where there's lots of robustness.
Okay, so once they recover, though, it becomes a different conversation, correct? Okay, it's one thing to recover, it's another thing to trend after that. Well, when you come into the ES, when did we feel that recovery from the Liberation Day drop? Well, Mark, we've been above that level since June. Since June, since the last time we had momentum. Momentum lived in the market until we hit that all-time high. And the very second we hit that all-time high, it's kind of been choppy. Well, when I come over to the Dow Jones, not the Russell 2000, that's actually a very interesting conversation. But when I come over to the Dow Jones, for example, what's the Dow Jones doing in that same time frame? It's dancing up against massive levels of resistance. And so when you're talking about the momentum side of the equation, where can that momentum get sparked? We can talk all day about the Fed minutes on Wednesday and the PMI numbers on Thursday, but it doesn't matter to me. It really doesn't. I have this as a technical conversation. When you're late stage trend and the market is in a multiple time frame breakout situation and the other indexes, I don't care about your catalyst, quite frankly. I care about the breakout here. Whatever the catalyst is, the catalyst is. But if we get a breakout of 45,000 on the Dow Jones, and if we get that RSP breakout on its multiple time frame level at 188, I think we can see momentum. And so to me, it's a matter of understanding that equation. Where can the market find momentum? And I feel like if you're just looking at the ES, that's going to be a difficult thing. Late stage trend with the lack of momentum. Max, I put all my targeting and whatnot in the newsletter, but where momentum can live, in my estimation, is if we get the breakout on the Dow, if we get the breakout on RSP. So ES and Q, the NASDAQ and the S&P 500 gets all the love, but I kind of feel like the momentum side of the equation is if we can get a breakout in cyclical.
No, and it's going to be very curious to watch. And we've been all over this in our pro membership. We will continue to be all over in our pro membership.
I
And
think you got to be ready to go above 188 on the
and
RSP. I think you got to be ready to go above 45,000 on the Dow Jones. I think you got to be ready to go above 6,500 on the ES. I think those are the levels the bulls are looking at on the indexes, and those are the end all be all levels on the indexes right now. So that's the levels you got to track. That's the levels you need to break, and you got to see a confirmation breakout. So I think it's an easy technical story. I think you're
yeah, no,
absolutely.
and Matt, I mean, would it shock you if stocks like Meta and the likes took a few months off while other things actually like the Dow led, right? I mean, we've seen it before. I know it feels like it's blasphemy.
That's fine, but that's not going to spark momentum.
You don't think the Dow itself and RSP, if the Meta takes can create the momentum you're
If
looking
Max
for?
7 semiconductors and tech in general take a break, you're not going to have momentum in the
Okay.
market. They represent 28% of the entire S&P 500. They represent over 50% of the growth rates. No, can the market trend? Of course it can. Of course it can. Can the market fade? Of course it can. Can the market drive momentum without the NASDAQ, without the hyperscalers, without the Mag 7? No, I don't think Caterpillar is going to carry the entire market.
It's going to be interesting to see what these charts look like after Jackson Hole.
Now, can the market have a pretty decent environment if three of the seven Mag 7 do nothing? Yes. But if all Mag 7 wants to take a break while the cyclicals take over, no, we'll trade the cyclicals, but I wouldn't say that's a momentum environment.
Now, the market short today did feel like it was taking the day off for Jackson Hole. I know we have a few other interesting things this week: Home Depot, Walmart earnings, right? We got some retail, some service, but the market felt like it's like we got Jackson Hole on Friday. Let's take a minute, let's digest that. Jackson Hole has been a catalyst event. I mean, are you keying any of your trades? Waiting for Jackson Hole, or if you broke out of the Dow ahead of that, is that good enough?
No, this is a technical conversation for me. I could care less about Jackson Hole on a Monday. I will care deeply about Jackson Hole on Friday. I will care deeply about Jackson Hole all next week. I will care about Jackson Hole for weeks after Friday. But today, no, this today is a very simple conversation for me, and I could care less about Jackson Hole. The market's range bound between 6460 and 6500 right now on the daily chart, intraday chart as well. Today was an absolute boring day. There was no way of painting that. I didn't think Jackson Hole was the causation today. I thought the Zelensky Trump meeting with the European leaders was the causation for the neutrality today.
All right. So, and Jackson Hole is a big, huge, massive event, right? For those that do not know what Jackson Hole is, it is an annual economic policy symposium where, what do you call it, Matt? The Davos of the West, right?
Called
All of,
Davos of the West.
Matt has been calling that for years and years. I mean, basically you have the elite,
I don't say it with I don't say it as a positive thing. No.
no, but it's this elite annual. I mean, it is the elites of the central bankers, policy makers,
Elites
economists,
concocting
journalists,
economic and monetary philosophies that none of us consumers going to appreciate.
you know, and they all come to Jackson Hole, Wyoming. Jackson Hole, Wyoming, a lovely place. I think it was Volker, Matt, who chose Jackson Hole because he liked something maybe about fishing. That's why they originally,
If you like fishing, you're going to get great fishing up there.
fishing in August in Wyoming is
Beautiful.
actually not bad. It's a nice rustic setting.
Mhm.
Nice rustic homesy setting where a lot of massive
Nestled
economic
right there
policy,
against the Tetons. Like it's beautiful. It's gorgeous up there.
a lot of massive economic policies have come in. And there was something interesting you said just a minute ago, where like because this is my brother, the technician. I don't care about that today, but you'll care about it, and you not for days, but I think you said weeks and months potentially afterwards, right? Where because it can have some long-standing effects depending on what is discussed.
I can
Right?
think of 5 of the last 15 meetings that had massive long-term impacts. Yes.
What are the top ahead, and I'll key off some of the ones I think of that you might miss.
Top 5?
Yeah, and
Top ahead.
challenging my brother on the top five. This is I mean, Matt's an expert
You're
on
putting
this,
me on you're putting me on the spot though. This was your conversation.
you know.
Um,
So
okay, so top five. Let me think about the top five Jackson Hole moments very quickly. Top five. Do you want them in order
nope,
or just in general?
no, just let's just talk about him. I mean, because this is a massive thing. Now,
All right, I'll go from oldest to newest.
okay,
Okay. So 2010, Ben Bernanke lays out the argument for quantitative easing two.
yep.
That to me is either 1A or 1B on the most important Jackson Hole
And
meeting.
everybody that has retired thanks to their 401k in the last 15 years owes that moment a insane amount of
And,
gratitude.
and while you give Bernanke a lot of credit for that moment, please also blame him for stealing your retirement in the first place. So let's just, if we're going to give credit to the Fed for giving back, let's make sure that they equally get the blame for taking away, because it was their, well, them and their fiscal policy brothers out of the United States Congress that created the environment for the subprime meltdown in the first place.
Mhm.
But I'm going to stop short of giving Bernanke any credit since he used the environment to make a ton of money on mobile homes. But that to me was the probably the number one in the last 15 years. A close second for me would be the year in 2020 after the pandemic when they changed the inflation, the way they gauge inflation. And I remember being
I
on
think
this
they called
podcast.
it flexible average inflation targeting.
It's so stupid.
Flexible inflation average targeting.
It's so dumb. That is so dumb. But it's when they changed the way they were calculating the inflationary pressure within the mandate, meaning they were targeting 2%, and now they said we're going to target 2.5%. Mark, now, do you remember what I was saying when they
Oh,
were doing
at the
that?
time, you're like, listen, it's way above that.
This is going to guarantee inflation coming in. I said that
You
in
said
20.
it. You were very clear on this
This is
podcast. Like,
guaranteed to bring in inflation because if they're going to target 2.5%, they're really targeting 3%.
and
And I
it's going to
remember
run much
saying
hotter
this,
than that.
if they target 3%, people in America will not retire. And you know what? For the last 5 years, we've been dealing with an affordability crisis, and people will not be able to retire based on that meeting alone, based on that terrible, terrible, terrible decision to recalculate how we deal with inflation. And keep that in mind as the powers that be start getting their dirty little greedy hands all over how we handle economic reports in America right now, because that was one of the biggest, most disastrous decisions in Fed policy history was the retargeting on the adjustment of inflation in 2020. Um,
Well,
number
both of those were
three,
on my list.
Number three, I would go to Mad Money Mario Draghi in 2014. Mad Money, he definitely deserved the name Mad Money. Mario Draghi was the chairperson of the ECB before Christine Lagarde took over. And Draghi basically was late to the party on QE. And in 2014 at Jackson Hole, he gave a speech where he was talking about how the Eurozone is going to embrace their version of QE, right? And so this really kind of started seeing it go QE from going just an American policy to seeing it literally go very aggressively outside the world, outside of America as well. So you got the 2010, you got the 2014, you got the 2020. The two others I would say would be the 2022 on the pain is coming.
Yeah, in 2022 was very interesting. Not because it like created this policy that was going to be said for change the policy nature for decades to come. It was really interesting because Powell came out, yelled at everyone,
He did
essentially gave a very short speech,
five
said
minutes, 7 minutes.
yeah, like, which was
Yep.
very abnormal, and basically said there's a lot of bad things coming.
He said pain's coming. And in 2020, he said, we're going to adjust the inflationary target. In 2021, they embraced transitory, which I said, again, was the dumbest word in the history of mankind. You could not use it after you readjusted inflation, after you printed trillions of dollars during the pandemic. It was the dumbest thing I've ever seen, made by smart people like Powell, to readjust the inflationary mandate in 2020. People don't understand how big of a sizable impact that had on their lives. Like people don't understand how big of an impact these Fed decisions have on their day in, day out lives. We have a tendency to yell at politicians and blame politicians, and we're in this little cold civil war in the U.S. right now between the left and the right and all of that jazz. When if you guys want to bring together and hate a united front, well, here's the central bank adjusting inflationary policy literally during a pandemic that we were pumping trillions of dollars into the system, and they knew it was going to spark inflation. And instead of admitting that, they just said, well, we're just going to change the mandate so that we can target more than 2%. And when the Fed says we're going to target more than 2%, let's not be shocked when we get more than 2% on the inflationary side of the equation. And so I would say 2010, 2014, 2020, those are the three so far. 2022, pain is coming would be the fourth. And then the fifth, I would have to say 2011, Operation Twist.
Okay.
Uh, they figured out there was a flaw in the quantitative easing program, and the flaw was it ended. That was the flaw. They had told people when quantitative easing was going to expire, and every time quantitative easing expired, the market sold very aggressively, and so they embraced Operation Twist, which led to quantitative easing infinity. So I would say 2010 the QE2 saga, 2011 Operation Twist, 2014 Mad Money Margio, 2020 the inflationary adjustment to 2.5%. Real target was 3%. 2022 on the pain is coming. Those five off the top of
Yeah,
my
the
head.
only one different I had, I didn't have that last one you had on your list. I had 2008 just because it was like just a few days before Lehman Brothers crashed and they met.
Mm.
They met and Vern Bernanke, was, didn't like signal anything bad was coming like on that. And just,
Well, to be clear, for 6 months, he would have been saying nothing bad is coming while the market was literally dying in front of our eyes. Like, these things don't make you trust central bankers when you understand how they act. But yeah, okay, I'll give you the 2008 nothing to see here moment. But like I had Ben Bernanke giving that speech in February of '08 when he was basically saying there's nothing wrong with the subprime market, there's nothing wrong with debt, there's nothing wrong with, vehicle sales, and all three were in massive recession 6 months later. Talk about a central bank chairperson who misjudged the environment, in my estimation. And some people give him credit. He gets no credit in my house. None. Zero. I have him as the worst central bank president in the last 45 years. I don't think it's close.
yeah. And so like it's important as an investor to pay attention to the big picture that can come out of Jackson Hole. It can be massive.
Mhm.
This year, Matt, they are talking about labor force in transition. They're actually going to talk about AI.
Wait a second. Hold on. Jay Powell, breaking news. Jay Powell's going to entertain will AI impact labor?
Like, and if you've been a
Oh,
listener of us, like we've
so
mocked Powell because he's been very dismissive. Labor in transition is the title of the macroeconomic discussion. They're going to talk about aging population. They're going to talk about labor shortages. They're going to talk about the AI impact, right? So it's going to be just very interesting to see their take on this because, well, Powell, for one, has been very dismissive of AI, like, hey, maybe it has jobs. Maybe it takes, I mean, yeah, who knows these things, right?
Mhm.
Uh, I don't know. I'm just as a geek. Now, I don't know if I expect any big monetary announcements. Now, traders will be focused on the price action following Powell. Powell gives a speech 30 minutes after. And this has, because Jackson Hole is a big event, ever since Powell has been chair, that can cause some price action, right? Matt, you referenced there will be pain. I think that was a nice 2-3% down day. right? 2019, there was a big down day. We've had some up days as well. The price action in the days after, right, following any major thing, they can fluctuate just like after the CPI or just after a big unemployment report,
Mhm.
right? But, it comes down to technicals after that, doesn't it?
Well, yeah, after every event, it always comes down to technicals. The technicals tell the truth of the environment. Technicals tell the truth of how the market sees the environment. I have my concerns on the technical side of the equation with the slowing momentum here. Um, a negative reaction to Jackson Hole, and I think that's why this conversation is important. We could see the market down around 6,300. And if you see the market down around 6,300, you better start embracing an ABC short-term trend there because you're going to be violating some support levels and you're going to want to start writing more cover calls and you're going to start wanting to be a little bit more cautious on the bull side of the equation. So late stage trend, you kind of get a little bit cautious on the bull side. Slowing momentum, you get a little bit more cautious on the bull side. And quite frankly, market, you say it becomes a technical conversation. It's a technical conversation right now. It's going to be a technical conversation next week after Jackson Hole, in my opinion. And Jackson Hole is just going to help provide any momentum lift to either the upside or downside. But no, I see the market after earnings season. It's going to be damn hard for me not to see the market from a technical perspective. That's all I can see here. I can see slowing momentum and I can see the very early beginnings of a head and shoulder formation. And so that's why I'm cautious.
What are you teaching in Master Trader tonight?
I'm teaching Elliott wave theory, trend analysis, and pattern development at
Like,
key levels.
I was talking, we were in our pro membership today, Frank and I, and we were just talking about technicals. And we're like, listen, you have to have this knowledge. You have to be able to read a chart. You have to understand. It's 2025. Technicals have just taken over the market, something that's been true for decades. But man, it feels like it's more true than ever before these days.
Well, it's because 90% of the market is algorithm based, and algorithms are programmed based on price action probability. So what algorithms have done is basically solidified the argument regarding the efficient market theory. The market is a technical driven market.
Yeah.
Very
Uh, it doesn't feel like this Jackson Hole is going to make the top five all time of policy moments, right? No
No,
matter what the
no.
exciting, interesting conversation in AI
I,
and
I
jobs.
th don't get me wrong, Mark. I think that AI conversation and the jobs and the shifting labor dynamics is a vitally important macro conversation. You know, my philosophy, I think AI takes up a lot of jobs over the next 3 to 5 years. Our labor market is going to be completely different 5 years from now than it is today. Robotics and automation alone get us there. It's a very, very, very important part of the equation of how Americans will even navigate the financial world, the economic conditions, life in general with the advent of AI. And you got a central bank president who doesn't even acknowledge that AI is taking jobs when it's already taking jobs. And so I don't think it's this setting that the world convinces, Jay Powell that AI is a real thing and that's going to take real jobs and it's going to have a real impact. But, maybe a year from now, Jay Powell can finally give a speech about what they're going to do about it. So, no, I don't think them acknowledging the problem that everybody that listens to this podcast in the next week is going to already understand. So I don't think that alone is going to be a major market mover. No, unless they have solutions to the problem.
Which
But
they
they're
don't.
they're still in identifying the problem.
Yeah, I think that's what this whole symposium is about this year.
Yeah,
It,
let's identify the problem so that over the next 3 to 5 years we can lay out the UBI argument.
basically.
I'll write the speeches for him for the next 5 years. That's
All
fine.
right.
Hey, Central Bank, send me an email. J Pal, I got your back. Actually, you're going to be fired. So whoever takes J Pal's job, contact me. I'll write your speeches for you.
So there shouldn't be a lot of excitement on that front. The only thing that really could potentially be excitement is Powell's speech on Friday morning, 30 minutes after the market bell, right? This is going to get an
That
algo
I'm very
response.
interested in.
It's going to get an algo response, right? If there is any hint at dovishness, or if the market interprets, that probably provides the catalyst to break out on the Dow.
Does that mean I would win a steak dinner?
if Powell comes out and says
Powell
we're
comes
probably
out on
cut.
Friday and sounds dovish.
No, because if the market interprets dovish in that, no, if he comes out and says, yeah, we're probably going to cut, yes, steak dinner, I owe you. Yeah.
The standards for me to win this bet when I'm obviously right
Well, the
is
Fed's not going to cut in September, so I'll win it and we'll save all of them.
you want to double down on that steak dinner, buddy?
Right.
Mouthy.
So,
Let's go.
no, I actually felt more confident about that until Mary Daly came out and said we should cut a lot. Right. So,
They're cutting in September, bro.
so
But can we talk about that for a second? Because you've had some, okay, we get the Fed minutes on Wednesday,
yes,
right? In your estimation, is the Fed minutes going to move the needle at all?
they might mouth some algo stuff. It doesn't matter. Dude,
I don't care about that. I don't care about that. Does
no,
it move the needle from a probability of the Fed cut in September?
no, maybe a
I
point
don't
or
believe so
two.
either.
Yeah.
And the reason I don't believe so is because since that Fed meeting, and we're going to get the minutes for that Fed meeting 3 weeks ago, we've had a labor report that showed the labor market imploding. We had an inflationary report that showed inflation was pretty decent. Then we had another inflationary report that got everybody really, really, really nervous for a rinse and repeat of 2022. So obviously the data has shifted. How does that impact Powell here?
I mean, and that becomes the trading question, right?
Yeah.
Because if I interpret Powell as actually being dovish, I will add bullish credit that day, right? Or if I was, if I play the Dow, I'll add a directional play potential, one that I have things, right? There are things that if I interpret Powell to be dovish, that I personally will do.
Isn't the speeches alone dovish, given the fact that they're talking about the fear of AI and taking over?
It's a good take, actually. I hadn't thought about that. Like the nature of
the natures of the
the
entire
nature of the whole symposium is dovish when
I,
you think
I,
about it.
you cannot tell me there's a hawkish lean when the central banks and the powers that be around the world are figuring out what to do with the labor market equation in comparison to AI, because it's going to be a UBI. It's going to conclude with UBI. Like, I don't care. I don't know what the path to UBI is, but we are absolutely going to embrace UBI in America. It is absolutely going to happen. Too many people will not have a job. Like, it will absolutely happen. I'm not saying that the governments and the powers that be are gonna fund everybody's lifestyle. That's not what I'm saying at all. There's going to be a UBI component to the market. UBI is universal basic income. There is going to be that component to the market. Whether I like it, whether you like it, whether somebody else doesn't matter. And so if the conversation at the central bank this week is, or at Jackson Hole this week is AI and how labor is going to change and evolve, that's going to immediately lead to the secondary conversation of how are we going to support the populace as that happens.
Yeah.
That's a dovish conversation. So, yeah.
No, it's very curious, but
It
like
would be hard to have that. My whole point, Mark, I'm sorry to cut you off. My whole point is it's hard to see J Powell coming out on Friday morning, very aggressive and not caring about the implosion of labor at all, while the entire symposium is about how AI is going to take labor.
unless Jay Powell wants to come out and give the same speech he's given 87 times this year, right? Now, I think Powell will come out and give some version of the same speech he's given 87 times this year, right? Balance, blah, blah, blah. I mean, if he doesn't, that means it's probably a dovish speech, and everything else, probably that Dow breakout probably happens, right? But if he comes out and gives that cranky, I mean, he's not going to come out and give a pains coming cranky speech. I think we're pretty safe to say that, correct?
No, this ain't 22. No.
Yeah. This is
a hawkish inflationary one. It's not.
It is either the same version of the speech or a more dovish version of the speech.
I think he's more dovish.
And so, well, you probably get your Dow breakout. You probably get your small cap
Do I
continuation.
get my steak dinner?
Unless he is saying we're cutting, right?
I'm going to be so right on this, and I'm not going to win a thing because of your standards. But let's move on. So, final thoughts on the Fed this week, Chucky?
Yeah, no, just be prepped, right? I think being prepped in Dow breakout. Tune into the newsletter this weekend. We will write on Jackson Hole this weekend in the newsletter. We'll give you our take for our pro members. We will do a podcast next week, talk about it. And if you get a combination of macro catalyst and technical breakout in certain areas of the market, it's worth a play. That's my final
If
thought on it.
we are talking post Friday and RSP is broken out of 188 and the Dow Jones is broken out of 45,000 on the YM, I don't know how we're not going to paint that as some degree of bullish opportunity.
Yeah, I think tech takes a break during that
That's
scenario.
kind of what I'm. They can take a break. That's fine. But I don't think they would counter trend that.
No. I
Uh,
mean, but I
and
mean,
and your definition of taking a break might still be more price appreciation than the general RSP stock, anyways. So Palantir's up what 2% instead of one? It's taking or 1% instead of two. It's taking a little bit of a break.
I don't know. I think they could counter trend a little bit. I'll be honest. 2021 true rotation style. I do. So RSP in that scenario, small caps, Dow, cyclicals lead, rotation, kind of like February 2021. Like I could see that style.
Maybe like and that would be fine. Like I'm
Just
just
normal bullish rotation conditions.
like, yeah, that'd be great. I mean, if the RSP wants to break out, down wants to break out, I could care less. Like if you're right or wrong, that's going to be debatable. But and I'm talking on the tech side. If tech fades while everything else goes up, but if that happens, like I'll just see that as a ooh, wait for the RSP to get overextended slightly and
And then you buy tech. Yeah, it's just
slam tech.
yeah, and then you slam tech. That's my playbook. That's my base case. And of course, things change, you adjust, but that's my base case prepping to play. All right, got a few stocks and drop it for you real quick, Matt.
Cool. I like stock or drop it.
I like stock it or drop it too. And I'm going to give you it's an interesting mix. It's a much different mix than what we've had in previous week. I'm going to start with United Health though. Test the fundamentalist and the Buffett lover and the technicals with you. Listen, UNH Lawn chronicled some situations, some down, it's got bloodied. Well, you've had some individuals step in and buy. David Tepper, Warren Buffett, Michael Burry, right? All on the record for having purchased UNH recently amidst the carnage. Stock it or drop it, Matt. UNH.
Have we ever defined exactly what the stock it is?
No, it is very liberally loose. It is what you want it to be.
Okay.
Do you want it to be a swing trade, a long-term investment? It's whatever you want. I
Listen,
just want your analysis. If your analysis is good on the long-term
I
side,
don't go against Buffett. Like Buffett wants to buy something. Who am I to question the greatest bottom feeder in the history of mankind? Who am I to question that man when he finds a deep value opportunity and he gets paid to buy that deep value opportunity? Buffett is very well known for deep value. That he loves deep value, and obviously he sees an edge here on UNH. You know, Tepper and the others, Murray, obviously a little bit of a different conversation there. But yeah, I don't ever go against Buffett, so I'm not going to say drop it here, even though it is UNH. What I will say is UNH is not going anywhere. Meaning this isn't a company that's ever going to, go bankrupt and be belly up. It's too important to the United States of America in general. And I also think the weekly chart here is extremely interesting here on UNH. And it would have to get dialed in on that daily chart, but you're starting to get to the point where you got this multiple time frame in the reversal, and I would have this as a head and shoulders as of right now, inverted head and shoulders. But you got this level right here at about 325, 326. You got the 20 weekly moving average there at about 332. It's going to take a good couple weeks in standardized development, in my estimation, for this to be a pure technical formation that you would absolutely love. But I do think you kind of like the 226, 227 level of resistance right now. And so and the thing about it is because the volatility was so aggressively to the downside, and because you've taken off some time, you've now gotten some pretty significant weekly pockets that are interesting on United Health. For example, you got a rock
that's a big pocket.
120
Yeah,
point.
that's a massive pocket.
It's massive. There's so much room there. You come out to the longer time frames. mark. On the monthly chart, the bottoming of it is the 200-day moving average. So, I think it's actually a very interesting technical conversation. Obviously Buffett sees something from the valuation side of it. And when you are looking at valuation with United Health, give me a second. Let me kind of go over to FinViz very quickly. But when you are looking at FinViz here and you go to United Health, obviously they've had some fundamental issues, but Mark, a P/E ratio of 13, forward slightly elevated there. Price to sales at 0.66, price to book at 295. Those are not bad in any capacity. Obviously, there's some growth issues here given what United Health is doing from a fundamental perspective. But yeah, I'm going to go ahead and stock it here. I think the 225 to 227 level, there's kind of a little bit of zone there. I think that is a really compelling zone to track. And again, Buffett sees something on the investor side of the equation. I don't have an investor mindset around United Health. This is more of a like position style analysis. Can we catch a pocket here? And that pocket is significant. A couple weeks of development, maybe a week of development is needed, but it will take a little bit of a high base. It's overextended on the daily chart. You'd want to see that get dialed in, but overall, a reversal happening on a major healthcare component that Buffett, Tepper, and Burry all bought last week. I think it's compelling enough to stock it and track this reversal.
Yeah, absolutely. Listen, Intel's trying to make a record for most stock stories by $20 stock in the history of the market. This stock is seemingly in the news every day for something. The most recently one, though, caught my attention quite a bit after Bloomberg reported that the Trump administration is in talks to buy a stake in Intel,
Are they?
which I found very, very interesting. This bottoming formation, I like these
I
consolidation
don't like.
patterns.
Yeah,
From a
I,
cash
I
flow
have
perspective.
I have heartburn over the government getting too involved on the public side of it.
Well,
Private
it's
side of it.
it's stock it or drop it, not is the death of capitalism here. We're not playing that game.
We're
We're
not
playing
there
stock it
yet.
or drop it. So
Yeah, the U.S. government usually gets involved in depressed asset classes. I don't think that's a reason for us to do it. I'm gonna drop this one. I see the edge though. Like if I had more confidence on Intel's fundamental side of it, Trump, give me a call. We'll talk about the fundamental condition of Intel. Maybe we can find you a better semiconductor to offset. But like technically here, 25's clean. It's been clean for a while, but you got a couple wicks to the left. I know if the US government is looking to gobble up some Intel, it's not because Intel's growth is so amazing. It's a drop it for me.
all right, Applied
Government
Materials.
backing creates neutrality in Intel. It doesn't create upward movement in my estimation.
Applied Materials got whacked on Friday on their earnings. Also came at the same time that there was negative semiconductor news that might have played a role in the size of the candle, right? That where Trump said that he was going to put additional tariffs as early as this week on the semiconductors. Probably played a role in the size of the candle, but Applied Materials got whacked, gave up about half of the April lows. Good, solid, fundamental company. I thought I'd put a hard one for you. Stock it or drop it, Matt.
Yeah, it's a great company. Applied Materials has been on the tackle 25 since you're gonna be shocked since 2015. Since it was a $20 stock, it's been on the tackle 25. This is probably the last year it's on the tackle 25. For a couple reasons. Number one, Lamb Research. Lamb Research has just kind of taken over all of the love from a lot of us at tackle trading. It's fundamentally, I would describe Lamb Research as a much better company fundamentally than Applied Materials at this point. I like their growth better. I like their valuation better. And I like their price tag for the cover call or credit style trading a little bit more as well. And so Lam Research has kind of taken over that position that Applied Material had for many, many, many years for me. But that's Lam Research now. And so Lam Research is going to be a mainstay on the Tackle 25. I said their earnings report from a couple weeks ago, gap down, was a little nonsensical. Um, Maybe just a bad day to report for Lam Research, but I didn't think like they didn't have a bad report. They had a good raw number beat, good guidance. On the flip side, Applied Materials, yeah, it was a bad day to report earnings on Friday for the semiconductors with that tariff news, chip restrictions coming in on Friday. But you also missed guidance here and dropped guidance. And guidance was expected at 230, I think it was 235, 236 on the EPS side of it. That came in a range between like 191 and 232 or something along those lines. So it's just a bad report, honestly. And you got, regardless of what you think about a company, you got to call a spade in the market. You got to call balls and strikes in the market. You know, I try to do that politically in my life. I don't wear either side. I don't wear either hat mark politically. I try to call balls and strikes. I think it allows me to navigate the markets better, quite frankly. I think it allows me to see more clear-eyed from the macro side of the equation, from a fundamental economic central bank perspective. I try to do that same thing from a bull v bear perspective. I try to, just focus on the company, focus on the fundamentals, call balls and strikes. And even on a company I absolutely love like Applied Materials, they're just not Lamb Research. And honestly, it's as simple as that at this point. And so they're unfortunately going to be a drop it here in the podcast, and most likely a drop it coming into the top 25 next year.
Final one, quick one, just to let you know, Nvidia's earnings next week. Nvidia got an upgrade this morning ahead of earnings, 240 price target by the bank. Stock it or drop it, Nvidia.
King Queen Country AI, stock it, and you stock it until otherwise known.
All right, got two questions for Coach's Corner as we finish off the podcast. Matt, this is one I've been saying for a little bit. I want to do a whole podcast on one of this one day. A student emailed in, had a bunch of questions about different things with coaching, and then said, by the way, I have a 13-year-old son who wants to learn stocks and trading. What would you suggest to them at that age to get started? 13-year-old son kind of has an
Futures.
interest.
Scalping futures, definitely. I kid. I kid a little bit. No, I think you got to put it into their language, number one.
Oh, I like
You
that.
got to make it fun. Like more than
Oh,
anything,
I
you
like that.
got to make it fun. But I've done this with my kids. I've done this with other people's kids. I've done this before, and you got to put it into analogies that they understand. You got to put it into, you got to make it a game to a certain extent. The Bulls v the Bears. Here's what the Bulls camp does. Here's what the Bears camp does. This is what you do when you buy a stock. This is what it means. But I oftentimes, when I get asked that question, I oftentimes think about Warren Buffett and how he got his start. And how he got his start was he basically talked to his father, who was a broker in Omaha, and his father recommended a stock that he just go and buy. And old Warren Buffett's eyes at the age of 11 years old got so big and so bright and so excited, so excitable. Kids are so excitable. They get just the world in front of them. They get so excited on these types of things. And he just went out there and bought a couple shares of an oil and gas company that eventually went belly up, but eventually that led to him buying Coca-Cola, and the rest of the story's history. But you do got to put it into their language, and you got to try to make it entertaining and try to make it fun and use creative analogies, but don't get into anything too advanced. Like, don't try to geek out on a butterfly spread with your 13-year-old. Talk to them about buying the equity. Like literally, don't even get involved in the options side of the equation. Go, just ask that young man, that young girl, whoever your kid is, ask them what they like. Truly, start with there. What do you like? When I was back in the day, I used to do these trainings for legacy education quite a bit. And I would like, people would come up to me and they would ask me, "Well, Matt, what's a stock? What's a good stock for me to invest in? What's a great stock?" And I would always ask them, "What do you like?" And they'd be like, "What do you mean? What do I like?" And I'm like, "Well, what do you like? What do you spend money on? What do you like? What's your subscription services that you spend on? What stores do you shop at? What food, what grocery chains do you go to?" and get them thinking about the things that they use in their everyday life. See, Mark, the things that every one of us use in our everyday life usually comes from some degree of publicly traded company at some point. Oh, you like Starbucks. Well, guess what? Other people like Starbucks. And if all these other people like Starbucks, don't maybe you want to think about being an investor in Starbucks. Ooh, I like McDonald's. You like McDonald's? Really? Why do you like McDonald's? Happy Meals. Oh, you like a Happy Meal? Let's go down to McDonald's. Let's talk about Happy Meals. Why you like Happy Meals? And I'm going to talk to you about how that's going to impact McDonald's revenues and how if you start investing in revenue at McDonald's with say the money you're saving, and all of a sudden 15 years from now, you have a dividend to the point where you can buy all the McDonald's you want. You got to start talking to them about the things they like because and by the way, that's not just me. That's Peter Lynch. That was how Peter Lynch basically destroyed the S&P 500 for 25 consecutive years, beating on average by about 3-4% as a fund manager is outstanding. And basically, that's what he talked about in the 1980s. Think about things that you spend money on. And you can do that same thing with a kid who likes to spend money on Roblox or a kid who likes to spend money at their favorite shop or online or whatever the case might be versus you. You know, what car do you drive? What vehicle do you drive? What gas station do you go to? What grocery store do you shop at? What clothing store do you shop at? And ultimately what Peter Lynch said was, well, if you like it and other people like it, what's happening with the revenues over time? It's going up, 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 up. And if the revenues are going up, what's happening to you if you're the investor? You're making more money as well. And what I always say to that is just because you like something doesn't mean you have good taste. We have to take the analysis a little bit deeper than that.
Yeah, that's fantastic. I love that. Like, you're great. You're a great teacher. You give good answers. That was just superb. I love that. I can't wait for the individual to forward to them, be like, hey, Matt answered that. You go check out the podcast, do that. Final question, because I know you got a little master trader
I
event to
do.
get,
I do. I do.
but
I
I
do.
do want to sneak this one in because this one was asked to me personally. I find myself playing too many small edges in my day trading.
Mm,
Any advice?
don't trade small edges. That's my,
I know, right? But
like, what are we doing? Um, I know you want something more detailed than that.
uh,
Um, let me put it like this. For the market close today, I spent some time with a bunch of day traders. Okay. And a lot of them were like a little bit complaining about the market today, right?
oh, it was not a day trader chart today.
No, it was not.
It was.
And I said to them, okay, and I said, well, where's your edge? Right? Okay, here's your edge above this level. If it breaks this zone, right, there's your edge. Okay. I'm like, all right. The range on the S&P 500 today. I didn't do hardly any day trading today, Mark. Like
Oh,
hardly.
it was not a day trader
So
day.
boring. I said, okay. So where's your range, your intraday range on the S&P 500 right now? All right, it's 40 points. That's the intraday range of the S&P 500 right now. It's 40 points. And so you got this support level at 6460 and you got top shelf right around 6500. That's you got a couple ticks up there, but that's basically the range, 40-point range. Mark, any reversal is going to take at least 15 points of that range before you have any edge.
Mhm.
Any edge, you're going to give up at least 15 points on that range because you're never going to buy the ticket for 6460. That's insane to buy the support level. You buy the confirmation of the reversal, which would be above all of these wicks right here. All of these wicks right here are the top end of that range. Okay. So there's that 15-point range right there. So if you buy above that level, you're giving up 15 points of the range. Now, Mark, you're not going to drill the tippity top. That's just not how it works. And
Not
so
realistic.
let's say you get, best case scenario right there. That's the range you have that you can legitimately expect in the S&P 500 today. Nasdaq wasn't much better. RS, none of them were. So why are you being aggressive in that range? What trend do you have? What pattern do you have? What's your reward to risk ratio? But what's your expectations there? Like truly, like you're not you that's not a day trader's range. And so what happens a lot of times with the day traders is they get anxious.
Yeah.
They get antsy. And I speak as one. And we have a tendency to try to create scenarios for us, basically, because we want to trade, we want to trade, we want to trade, we want to trade, we want to trade. And all of a sudden, it's like, but it's not there. You don't have the range, you don't have the edge, you don't have the probability, you don't have the reward to risk ratio. But I want to trade, I want to trade, I want to get anxious. I'm a day trader, I'm supposed to trade. So what do? They have a tendency to drop time frame down and try to convince themselves of, but look at this amazing pullback right here. Oh, but no. Let me drop it down to a 1 minute time frame. I'm gonna find my edge on that 1 minute time frame. Now, the advice I would give to them is patience. Patience. Know your ranges, know your levels, wait on your development, but you gotta have patience as a day trader. The best day trade you ever have that you ever have, they're not going to be within a 40-point range on the S&P 500. Why do you think I keep coming back in all of Tackle Train content, in the podcast here, yesterday in the Futures Open show? Where's the momentum? Where's the momentum? Where's the momentum? Right? Well, I'm not going to sit there and look at that 40-point range and get excited about 15 points all day long. Like I get excited at as it breaks out of the ranges. Okay. I'm not going to get excited within the range. I'm not going to, get too, aggressive inside a very tight range on the S&P 500. I'm going to get excited when they break out of those ranges. Brian, we do daily shows all the time. We do the lounge in our Discord channel every single day for our pro members. We do the Futures Open in our Discord channel for absolutely everybody on Sunday. We do the podcast streaming here on Mondays. The only day we don't stream some degree of content, most of it is for our pros, obviously, but is on Saturdays. That's the only day we don't stream. So what happened to the daily show? We just do it in Discord today. We don't do it in YouTube because we do it with our pro members.
Yeah. Listen, love the answers on both of those. Those were classic. Those were clip it and reference them type answers. Matt, you got Master Trader Teach. Let's wrap up our podcast. Send us out.
I do. I do. I got Master Trader coming up. It's going to be an awesome Master Trader this week. Obviously, I start teaching here in about 20 minutes from now. So, as you watch this YouTube, as you watch the podcast this week, or you listen to the podcast this week, realize this: you can always catch the replay. Number one, if you're a pro member, pro members have access to Master Trader always. It doesn't matter how many times I teach it, how many times Gino teaches it. You can attend as much as you want. You can watch the replays as much as you want. You have access to everything there. But we also do Master Trader every single month. And next month, we'll do another Master Trader class that you can attend. And it would be, if you're new to the market and you're new to trading and you want to learn how to trade, what I would suggest is sign up for a pro membership, get a free trial, watch the replay of Master Trader to prepare to attend next month's Master Trader. And in between this Master Trader and next Master Trader, get to know the Tackle Trading Pro membership, because you're going to love that as well. So that will be Master Trader. We're going to start here in just a couple minutes from now. Zoom. We do it on Zoom, and it's going to be a lot of fun this week.
Yeah, listen, everyone have a fantastic week ahead. Catch us on Trade Masters.
Linda, thank you. Linda was going to, Mark, I know you were about to pitch Trade Masters, but Linda was saying what he got coming up on Wednesday. We also do Trade Masters on Wednesday as well. So moving forward for YouTube, we're just coming back to our YouTube streams. We haven't been doing YouTube streams for a long time on YouTube, quite frankly, for a couple of years. Last week was the first time we did a stream on YouTube. And so we will be streaming the podcast on YouTube on Mondays. We will be streaming the Trade Masters on Wednesdays. We may stream the Futures Open on Sundays. I don't know. We do that one in Discord, so I'm still thinking about that one. But the podcast, Trade Masters, and we'll have a video release every Friday as well. So we're going to we're kind of embracing that, make YouTube great again at Tackle Trading. That's what our focus is. So Monday we stream the podcast. Definitely hit that like and share if you love the pod. On Wednesdays we do Trade Masters. On Friday we release a video.
Yep. Everyone, listen, have a fantastic week. Come be part of our pro membership. Email me at team at Tackle Trading or visit tackletrading.com. But take care. Have a great week, everyone.
Later, team.